Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, February the 29th, 2012. Well, a fairly large black-bodied candle today. And we have a market that's technically still trending up. Previous day's trading we had a candle with a higher high and a higher low that was a bullish candle that just took out the resistance area at 1370.58, closed above there in a bullish manner. Today's trading, the market tested up above that high, but the buyers lost commitment up around that area, failed to close up above the 1370.58 area. The black body denotes the sellers making net bearish progress on the day between the open and the close, and it's been roughly about a week since we've seen the market make net bearish progress. So the previous 4 days trading were fairly bullish type candles, or white candles. For today's trading we've also seen the price action rejected above that 1370.58 area, and the shadow on the top of the candle highlights that very well, where the buyers lost commitment up around that area. And the sellers were strong enough to take control of the market for today's trading by closing down near the low of the current candle. So the sellers have shown some strong commitment. Having said that, however, they weren't strong enough to take out the support area at 1363.98, and that was a previous area that we highlighted quite some time ago as an area of previous resistance, and we can see here how the market tested above there but failed to close above, then subsequently did, but now it held as support for today's trading. So that's an important level for tomorrow's trading. We also have potential support at the 1359.44 level, which coincides roughly with where the Tenkan Sen is trading. Now, to the upside, if we do see the market continue trending to the upside, and technically we do still have an uptrend in place, we don't have any major resistance above this 1370.58 area until the market trades up to the round number 1400. So if we see the buyers take control of this market once again and show some commitment, then we could quickly see the market trading up to that area, and above there's no major resistance until 1440. In terms of peaks and troughs, if we look at this, we see a very strongly trending market in the second time frame as well, with making a series of higher peaks and higher troughs. In terms of Ichimoku, the market's trading well above the cloud, so bullish in the long-term time frame, above the Kijun Sen, so bullish in the medium-term time frame, and above the Tenkan Sen, bullish in the short-term time frame. And the Chikou span here is confirming the bullish price action that we're seeing in this market. Now, in terms of candlesticks as well, this is a potential Japanese candlestick reversal pattern. It's a bearish engulfing pattern, and that's where the body of the current candle, the bearish body of the current candle, engulfs the body of the previous candle, and we have a prior uptrend in place. So there is strong potential for a change of trend to the downside. But having said that, however, we do have very strong support below, and initially we should watch to the 1363.98 level, which was mentioned previously, and the 1359 level, and the area where the Tenkan Sen is trading. Below there we have even stronger support down to the 1344 level, where we can see the shadows on these candles where the market was attempting to penetrate down through that level but couldn't close substantially through there. So we have overall a very bullish market. The short-term dynamics at the moment aren't supporting that bullishness. We could see the market sell off in a minor way and find support down around one of these levels, and then for the buyers to come back into this market and potentially test up to above this 1370.58 level. Next, moving to gold, and here we see quite a dramatic day's trading today. A very, very large black-bodied candle. And previously we saw the market trending up, making a higher peak and higher trough. Previous day's trading taking out that peak to confirm the trend in the second time frame, following a doji type candle. Yesterday's trading was quite bullish, with a fairly large white bodied candle with the buyers in control and making net bullish progress. But today all of that bullishness has evaporated, and a very, very large extreme candle to the downside today. The market today failed to take out the high of the previous day's trading, so we have had a downtrend established with the candle making a lower high and a lower low. And the area at 1767, where we found support for the previous two candles, previously resistance, has been taken out in a very substantial manner with a very bearish candle. The market did test down below the 1723 region, tested all the way down to 1683, this previous resistance and now support level, and found support around that area. Saw some strong buying coming in down and around that area. And we've only just closed down below the 1723 region, where we saw all of this, the shadows on the bottom of these candles, which represented the sellers losing commitment around there. So in one day we've had a dramatic change in the sentiment in this market. In big picture terms, the market remains bullish, but now the market is bearish in the short-term time frame, and technically bearish but quite neutral in the medium-term time frame by trading at or just below the Kijun-sen. So with this market being quite an extreme day, it wouldn't surprise to see some price action that isn't neither strongly bullish nor bearish over the next day's trading. Markets quite often relax when we see so much extreme bearishness in the market, but we certainly should still be watching the 1723 region and the area around the Kijun-sen at 1721 for potential support. Certainly the 1683 level is very, very strong now and quite important, and then down to the cloud around 1664, and all the way within the cloud down to the bottom of it, we should see the market hold very strongly if we do test to that area. To the upside, obviously 1767 is very important, and then the swing highs up around 1792, 1793 are important, but we might not see the market trading up to those levels in the next day or two. So quite a volatile market for today's trading. Let's watch how the market reacts down around these support levels. Next, moving to oil, and here we see a market that's trending down. The downtrend was established 3 trading periods ago with a candle that made a lower high and a lower low, and the market found resistance at the 109.75 level and has been selling off since then. For today's trading, the market actually tested down towards that window that we highlighted quite some time ago that was opened, and that region has held as support for this market now. We can see this large shadow on the bottom of this candle where the sellers lost commitment around that area. Around that area, roughly, the buyers came back in quite strongly to close the market up towards the high of today's trading, for the buyers to take control of this market and to show some strong commitment on the trading day. They have only just closed the market up above the 106.95 level, however, so that's a very strong area of resistance for this market. There is very strong potential for a change of trend. Here we see even though the market is still trending down with a lower high and lower low, we now have a white-bodied candle, which means that the buyers have made net bullish progress on the day between the open and the close, as opposed to the sellers over the previous few days. So that's quite significant. This is a type of Japanese candlestick reversal pattern, or almost. It's not quite perfect. It's an imperfect hammer pattern for a couple of reasons. One, because we have this smallish shadow on the top of the candle, although that's really not too much to worry about. But we don't have a substantial downtrend to correct here. A downtrend of 3 days, although it still is quite significant. The significance of it is the small body at the after the market's been trending down, and the very strong upside price rejection as evidenced by the shadow here. So that's very important, and that's exactly what sets this market up for that potential change of trend. In terms of Ichimoku, we do have a bullish market in all 3 time frames. Bullish because in the long-term time frame because we're above the cloud, also in the medium-term time frame because we're above the Kijun-sen, and short-term because we're above the Tenkan-sen, and the Chikou span is supporting the bullishness that we're seeing in the market. The Kijun-sen has turned flat, and the market's been retracing back towards the Kijun-sen. That's what happens when We have flat Kijin-sen, the market tends to be attracted back towards there. But also in markets where we have very solid upside momentum, they tend to find support at the Tenkan-sen initially, and that's exactly what's happened for today's trading as well. So the price action was rejected from below the Tenkan-sen, so that's a very important level for the market for the next day's trading as well, if there is an attempt to continue the trend to the downside. The window that was opened up, which is around 104.50 roughly, also is very important, and for the next day's trading, if we do see the the sellers attempting to take control. To the upside, however, the 106.95 level is important, and then the swing high of this current candle at 107.43. If we do see the market take out that area in a bullish manner, then we could very quickly test up to 109.75, and if we do see a breakout up above there with a bullish candle, the market could very quickly trade up to 115.46. We have very little resistance between the 109.75 and 115 level. So let's watch those important areas for the next day's trading. Certainly the 107 level roughly, and down around the low and the window at 104.5.